Hey guys, welcome to this episode of Bitcoin Simplified. I'm your host OJ. I'm going to be talking about the Bitcoin forking, and I'm going to try and explain what is BIP148 in simple terms so that we know exactly what to expect and what are we talking about. So there's been a lot of talk about BIP148, a lot of articles, videos, people, having opinions and trying to scare us. I mean, some of them are just issuing warnings, but of course, any warning is getting scary, especially if you don't really understand the topic very well, the matter that they're explaining. A lot of the times, they're talking in terms that are, quite technical and difficult, and in my research, I had to go through so many articles, and there has been a lot of technical stuff. I did have to go through a lot of the difficult, detailed matter in order to be able to strip it down and just simplify it. So what exactly is BIP148 and what does it do? Before I can explain that, I'll need to just mention something called segregated witness, SegWit. You've probably heard about SegWit as well. That is a proposal that was, I think it was launched in 2015 already by one of the main developers in the Bitcoin network. And SegWit is basically a change in the code that will allow for a part of the transaction to do with the digital signature to be not to have to be recorded alongside with the transaction, not to have to be included in the hash of the transaction. To keep it simple, just let's say it's going to allow that more transactions will be recorded onto each block in the blockchain. So with that, it kind of offers a temporary solution, I would say short-term solution to the scalability problem of Bitcoin. So this is, this is something that was proposed. It was quite welcomed by the majority of users and the Bitcoin community, but not quite widely accepted amongst all the miners. And the mining community, a lot of them were still preferring to go for something like a bigger block size or a different type of solution. But a bigger block size seems to be the one that is preferred by those who reject SegWit. And the previous proposal, which I believe was BIP141, was relying on having a 95% consensus on the blockchain. So 95% of the Bitcoin miners and nodes, economical nodes or technical nodes that are running the Bitcoin network have to implement SegWit in order to be activated. And they had to start signaling so that when you have 95% of the network signaling that they're ready for SegWit, it would be implemented. We couldn't really reach such a consensus amongst the network. Of course, the Bitcoin is not being governed by one particular company or body or anything like that. That's why you need to have that consensus from all parties involved. And it's very difficult to have that consensus, especially when you have a lot of politics also going on with Bitcoin. It's become a really profitable business right now. We know that the majority of the mining power is in China. Then we have the majority of the developers and the people who are actually creating and doing all the software programming and stuff like that. A lot of these people are in US or Europe. That's why we have not only cultural and political differences, we also have a lot of invested interest, and we have a lot of, for instance, the fees for miners have gone up through the roof. We are seeing something like $500,000 daily being paid in fees for Bitcoin transactions, something that just 3 months ago was 300,000, and 6 or 9 months ago it was 100,000. So we're talking about a massive growth in the fees that people are paying, and it's a big industry. So there's a lot of invested interest. Also, a lot of bigger companies are now involved with Bitcoin, and they're running exchanges, they're running wallets. you know, that they're having a lot of influence, and of course it's a bit of a battle right now for dominance in Bitcoin. That's why we can't really reach that consensus. But what is happening is BIP148 is basically a proposal that is looking at the users, because SegWit was supposed to be a soft fork, and I already explained in a different video the differences between a soft fork and a hard fork. SegWit was originally designed to be a hard fork, but then it was decided to be a soft fork because it's in nobody's interest for a hard fork. A hard fork would cause a split in the chain. This is what a hard fork is. And therefore, if we have Bitcoin blockchain split in two, that would create two different coins that will be fighting to become the actual Bitcoin, the original Bitcoin. And that will also cause a devaluation in the short term, definitely. There will be, you know, a lot of panic selling going on, and generally we're going to be looking at devaluation on the Bitcoin price. So it's not in our interest as users to see a hard fork. So SegWit was a kind of a good solution for a moment, but it didn't really go through. It didn't achieve the amount of people that needed to agree on it. So now we are looking at something called user activated soft fork, and this is what BIP148 is proposing. This is the main difference between BIP148 and the previous proposal, is that it will basically enforce SegWit, but in effect it will enforce it as a hard fork, because it's a user activated soft fork, but it will exclude any nodes, any miners that do not support SegWit. So if you're running a node and you're not signaling for SegWit, you will be left out of that chain. Your blocks that you are mining will not be accepted on that blockchain. That creates a hard fork. So even though we were looking at a soft fork and we were talking about a soft fork, and it's still called a user activated soft fork, in effect it's a hard fork, because there is still, it might be a minority, but there's still a lot of miners out there that are looking for bigger blocks and that were not agreeing to implement BIP148. Now there is a new solution, a new proposal that was discussed a couple of weeks ago, where about 80% of the nodes need to agree on implementing it, and it's again implementing SegWit, but this time it's combining it with a bigger block size, which is 2 megabytes block size, double the size of the original blocks. The original block size is 1 megabyte. It's not even the original block size, but it's the block size that was agreed very early on in order to stop hacking DDoS attacks and stuff like that. So currently the block size is 1 megabyte. It can be increased to 2 megabytes if that new agreement is being implemented. It's called SegWit2x, and it was discussed a couple of weeks ago at the Consensus 2017. So that would for me, that is the best solution. I mean, I really hope that this goes through. It's supposed to be implemented before August the 1st, because on August the 1st the Bitcoin community has already decided that they are implementing BIP148. However, if SegWit2x gets implemented before that, it is incompatible with BIP148, therefore BIP148 will not really go through. So it is, I think, it is a slightly less disruptive. If we look at SegWit2x, it is kind of a compromise, because it's implementing SegWit, which is what the main Bitcoin community wanted. The Bitcoin core team, the original developers, the majority of the developers of the Bitcoin software are agreeing and pushing for SegWit. So this is what's going to be implemented, and it's combining it with a bigger block size, which is what the opposite camp, the people who didn't really like the idea of SegWit and wanted a bigger block size. So it's kind of a compromise between the two ideas. There's still a lot of purists out there who don't really want this kind of a change in the block size, that will probably still insist on not going with it, and we can still be looking at a hard fork. But if we have 80% of the economical nodes and technical nodes that are running Bitcoin agreeing on SegWit2x, that is a majority, so that will end up being the longest chain, and the longest chain, the more dominant chain, is the one that that becomes the main one. So if you look at when Ethereum forked, you have Ethereum and Ethereum Classic. Ethereum Classic was not very popular. Ethereum, the new version, became really popular. It pulled a lot of attention, a lot of development and everything. So right now, when you say Ethereum, we are talking about the new Ethereum. When you look at Ethereum Classic, you're looking at an alternative coin. I know that they're both strong and they both have a lot of support. I personally support both of them, but it's not something that I really want to see with Bitcoin. I don't really want to see Bitcoin splitting in two, and it will. Eventually it will, but the important thing is that if it splits in two equally strong camps, it will be dangerous, because for a period of time they will be really competing, which means that you are probably looking at the price halving between the two. But if it splits into unequally strong halves, you will have a really dominant side of Bitcoin coin, and a less dominant coin that will eventually end up being an alternative coin, and the dominant one will be the Bitcoin that that everyone will be using. So there's still a lot of questions that we need to find out over time. We can't have the answers yet. What is going to happen and what you need to know? First of all, you need to look out for the news and see if SegWit2x is coming through, if it's getting a lot of support, and when it's likely to be implemented. Then you will have to look out what happens if it's not implemented. That means 1st of August is definitely coming. BIP148, that's definitely happening. If BIP148 is implemented, then you will need to worry about where is your Bitcoin. If your Bitcoin is in a cloud storage, a wallet that is online wallet, that is provided by a company, you will need to find out from that company if they will be supporting BIP148, the version that that will fork. Also, you will need to watch out if BIP148 will in fact become a dominant version of Bitcoin, or is it going to be a minority? Because if that's the case, it might be enforced, but if it doesn't get enough support from the miners, we might still be looking at a volatile time. I think miners will eventually have to agree with the implementation of BIP148, because it is not only users, there's also lots of miners and economical nodes that will be involved in implementation of BIP148. So I don't really see it failing, but it's very important if it's even going to happen. And then you have October the 15th, that's another important date. This is when Bitcoin Unlimited is going to fork. I spoke about Bitcoin Unlimited in my previous video about the forking, because at that point we were looking at the possibility of Bitcoin hard forking into Bitcoin Core and Bitcoin Unlimited. These are the two main camps that are kind of, cannot really agree. Bitcoin Core wanted SegWit, Bitcoin Unlimited wanted bigger block size. They didn't care much about SegWit. So Bitcoin Unlimited is still having that date of October the 15th for their forking, and they say that they're ready to be launching bigger block sizes. So and their idea is to increase the block size according to demand over time. So they're not saying we're gonna have 2 megabyte block size. They're saying today it might be 2 megabytes, next year it could be 6 or something like that. So there's still a lot of uncertainty. There shouldn't really be too much panic though, because what you really need to do is first you need to make sure that you find a wallet where you can hold your private keys. Even if it's an online wallet, there are a few. You will find a few links in the description here below. you can look out for a wallet where you own your private keys, so that if there is a split in the blockchain, you should be able to get tokens for Bitcoin amounts on both blockchains. So that would be a good thing if you're holding Bitcoin. Another thing you can do, and something that many people will be doing, will be to find out when is the right price for you and maybe unload. Some of the Bitcoin you can probably move into a fiat currency, or in my case, I'll be switching to alternative coins and USD Tether, which is a digital version of dollars, and it's what a lot of the exchanges are accepting. So that would be something that many people will do, and expect the price to be going down during that time. So if you are too late, you might be looking at a much devaluated Bitcoin, and for a period of time, especially during the forking, we will be seeing quite a volatility in the prices, and possibly a lot of dips. You might be looking at 20, 30, 40% price dip. It should be temporary, and it might be just, you know, instantaneous or something. You might see a very quick recovery, but it really depends on how everything is implemented. If there's a lot of chaos and a lot of disagreement within the community, then we're looking at a devaluation for a period of time. If everything goes smoothly, and if SegWit2x goes through sooner than August the 1st, we might actually be looking at you know, a price kind of holding and even going up again. So it's hard to tell right now what to expect. But yes, the most important thing is that you need to hold your private keys. So you need an either offline storage or an online storage that offers you the option to have your own private keys. If you are still with a wallet that is a cloud storage like Coinbase, or, you know, there are many wallets online that you cannot hold your private keys, then it's probably a good idea to reach out to them and find out what is their policy about the forking, whether they will be supporting the new version, the fork, or not, and just get advice on what is best for you to do. I think a lot of the wallets will issue warnings about moving your Bitcoin out of them, so that if there is a fork, you can profit from it. Because if they're only supporting one version of Bitcoin after it forks, then you will only have that version amount of Bitcoin. If you're going to a wallet that is independent and you have your own private keys, then you should be able to get the same amount of Bitcoins on both blockchains. I'm not sure if I managed to make it easier. I hope I simplified it enough, and there are a couple of important dates that I mentioned: August the 1st and October the 15th. So watch out for these. Don't watch out for these, but watch out what's happening prior to these days, because there will be a lot of excitement and a lot of trading activity going on. I expect a lot of selling, so prices going down, and a lot of panic selling catching up with these prices falling. So we might be looking at headlines again. So we'll see how it goes, but I hope this is helping for you to understand exactly how it works. And if you like this video, share it with other people and leave a comment below the video. Give me the thumbs up, and I'm gonna see you in the next one.